Costco slips 3% after a strong earnings beat. Investors digest valuation and slower adjusted comparable sales. Costco fell 3% following its fiscal third quarter 2026 earnings report, even though the warehouse retail giant delivered another quarter of double-digit sales growth, strong comparable sales, and rising profitability. The pullback appears to reflect investor concerns over valuation and signs of moderating growth rather than any weakness in the underlying business. Costco reported third-quarter net sales of $69.15 billion, an increase of 11.6% from a year earlier, while total revenue rose to $70.53 billion. Net income climbed to $2.19 billion, or $4.93 per diluted share, up from $1.90 billion, or $4.28 per share, in the prior year period. The results continued Costco's long track record of consistent growth and operational execution. Comparable sales remained impressive across all major markets. Reported comparable sales increased 9.8% company-wide, including gains of 9.4% in the United States, 10.7% in Canada, and 11.2% in other international markets. Digital sales were particularly strong, rising 21.5% during the quarter. However, investors appeared to focus on the adjusted comparable sales figures, which exclude gasoline price fluctuations and foreign exchange effects. On that basis, total company comparable sales growth was 6.6%, a solid result but somewhat lower than the headline figures and indicative of a more moderate pace of underlying growth. Another factor likely weighing on the stock was valuation. Costco shares entered the earnings release near all-time highs after significantly outperforming the broader market over the past several years. With expectations elevated, even strong results may not have been enough to justify further multiple expansion. Despite the market reaction, Costco's financial position remains exceptionally strong. Cash and cash equivalents rose to nearly $19 billion. Operating cash flow increased to $11.1 billion during the first 36 weeks of fiscal 2026, and operating income climbed 12.3% year-over-year to $2.82 billion in the quarter. Membership fee revenue also increased to $1.37 billion, providing a stable and highly profitable recurring revenue stream. The company continues to expand globally, ending the quarter with 931 warehouses worldwide, including 7 locations in China, and growing operations across Europe and Asia. Digital sales growth above 20% also highlights Costco's increasing ability to blend its traditional warehouse model with e-commerce capabilities. The stock's decline suggests investors were taking profits after another strong run rather than reacting to disappointing fundamentals. Costco delivered robust sales growth, expanding profits, and continued market share gains. But with the shares already priced for near perfection, the market appeared to demand an even larger upside surprise to sustain the rally.